Will there really be a staggering surplus of oil by the end of the decade in this world, as the International Energy Agency said yesterday? Now, this organization does pretty rigorous work, and they say that we'll have 8 million barrels per day of spare capacity because of reduced demand as the world goes electric, the Middle East switches to renewables, and the Chinese economy is slowing down. Now, if you read this report, you'd think that the world's gotten religion on global warming, that the entire globe's turned against fossil fuels, and there's nothing the oil companies can do about it. To me, this is pure wishful thinking. We aren't selling nearly as many EV cars as we were not long ago, and the market's not growing as most expected. Hybrids are in vogue in this nation now, not pure electrics. We know that two candidates for the president have very different attitudes toward the fossil fuels. So I think this IEA forecast, it may not be accounting for the White House possibly changing hands. Now, if we allowed Chinese cars into this country without tariffs, instead of the 100% tariff we're putting on them, electric vehicles would be much bigger here. But that could be a huge threat to the American auto business. They would take over Europe, too, if it weren't for the EU's 38% tariff. They just slapped on most Chinese cars. The average price of a Chinese electric vehicle is about 10 grand. My wife just came back from Italy, where she drove in a $10,000 sedan from China and thought it was every bit as good as a Tesla. Now, you might say, well, that at $20,000 with the 100% tariff, it may still be worth it, and it would be the standard bearer here. But you know what? If that starts happening, I think our government will just raise the tariff again. Our government wants to protect the American auto industry. It's not like Tesla can bring down the price of its sedan to match even the tariff prices of Chinese electrics, no matter what what happens with his contract or what he can do. He just can't. And while I've been consistently bullish on the future of the oil industry, and I remain that way, I think it's possible that we pretty much reach peak output here. We're beginning to run out of new sites to drill, even in the oil-rich Permian Basin. Now, on a day where we saw the producer prices index come down, I will say this. If the IEA is right about oil, we could have dramatically lower inflation. We already know oil will be cheaper if not for the war in the Middle East and the war in Ukraine. Crude's now at nearly $78. And if the world were at peace, I think you could easily imagine it in the low 70s or even in the high 60s. Second, OPEC Plus only controls about 48% of the market these days. If demand shrinks the way the IEA is projecting, then OPEC would be powerless, and the price of crude could be just down dramatically. But I don't see that happening. The supply situation may still be perilous. And amazing, the discipline of the U.S. drillers is just plain shocking. When oil shot up this year, the U.S. producers did not ramp up production. They kept it steady. There was a time when they'd be pumping like mad to get these new prices. So we can hope that there will be an oil glut, which would be fabulous for inflation. But as I see it, the IEA report is merely wishful thinking. There's just too much resistance to free trade with China to make it so electric vehicles are cheap enough to be widely popular in the developed world, even as China will surely be using less carbon itself because of these cars. If we take China's cars in at the Chinese government's subsidized price, again, I have no doubt the IEA report will be correct. But the only thing Trump and Biden agree on is the need to stay tough on China. So my bottom line, I say, don't hold your breath. I like to say there's always a bull market somewhere, and I promise to try to find it just for you right here on Mad Money. I'm Jim Cramer. See you tomorrow. Last call starts now.